for those of us that know Mr. Lucas Dada, you know that I'm just representing him. And, and basically, we're here to talk about promoting financial inclusion through SME retail business. Mr. Lucas Dada is the Director for Business Segments at Etisalat, Nigeria. We'll take some time to listen to our sponsors. Etisalat, Nigeria. Well, here we're talking about Etisalat Group, and Etisalat is in the Middle East. It's the largest operator, and it's the second most valuable brand in the Middle East, and the largest corporation by market value, 23 billion US dollars, and revenues exceeding 8 billion. A regional powerhouse with 17 operations across Middle East and Africa and Asia. GSM network covers 1 billion people, and one of the fastest growing networks in the world. So the question really that I'm here to give a framework or at least an answer in a particular direction to is, what can be done to create value to the everyday SME business towards integration into the financial system? And I think at the end of the day, integration into the financial system is what we all term as financial inclusion. We have, of course, through the cashless policy, been developing the financial systems in Nigeria, where we see all the players coming in with different products and even attempting and going towards interoperability. However, how does this trickle down to the everyday person? How does it trickle down to the everyday business? We have some pictures there depicting the typical SME sales and the typical traders that we have in our midst. Now, of course, the new technologies are being leveraged by banks and even other financial institutions, basically to bring about extension of these services to existing customers through the branches banking, and of course inclusion, where we narrow access by having newer products through mobile, through internet that reach new customers. So we are moving away from the brick and mortar. We are moving into newer products. However, how do we reach the everyday person? Today, electronic and mobile commerce leverage on ubiquity of technology, and we're seeing a lot of new innovations, even in Nigeria, that we haven't seen before now. People are using the internet online services to make payments, even purchase and get more information about products. Payment systems are available even from online systems. And even on the mobile, Etisalat has the easy ads where you can basically get information concerning, or advertisers can send information to subscribers for information on their products. We have the Easy Wallet application that allows you to connect to mobile money operators. We have the top up where you can purchase airtime over your mobile. However, we're seeing this trend. It keeps going. So the story here is still talking about how the electronic and mobile payment trend is increasing. We're seeing increasing transactions on electronic and mobile, as opposed to the old traditional check clearing systems. And basically here we have some details showing that as of December 2012, we've grown to 2 trillion transactions, 2 trillion naira in terms of value of transactions from a total of mobile, point of sale, web, and ATM. So this shows that there's been growth, although it's still nascent and low, but compared to the trend that we're seeing in check clearing systems, where there's a downward trend, there's an increase in public awareness and public confidence in using the new electronic system. So let's go and talk about the real people that I really want to bring to the fore here. Who are the SMEs? Studies by IFC show that 96% of Nigerian businesses are SMEs. Mr. Sindra alluded to that fact across Africa in terms of number of businesses that we have that are SMEs. The Smiden NBS report, or collaborative survey, 2010, also shows that SMEs are major contributors to sectorial GDP. A total of 17 million micro SMEs were identified in Nigeria. And these micro SMEs contributing as much as 46% to Nigeria's GDP. Well, this is coming largely from the non-oil part of the GDP. And at the end of the day, what their report goes to tell us is that there's a compelling growth potential in this SME sector. So to give us a sense of what we are talking about here, the micro SMEs are basically companies or firms with asset base of lower than 5 million naira, and they have staff between 1 to 10. Now, generally, SMEs in Nigeria are currently distributed along sectorial lines, and they are clustered at different regions within the country. This might not be very clear from where you are, but what we have here are different sectors of where SME businesses or SME clusters are existing, from the leather SME cluster in Kano to the Lagos. We have the ICT cluster in Otigba, Alaba Market, electronic cluster, and Mile 12, the goods produce. So at the end of the day, what we're saying is engaging this value chain, the value chain basically of the B2B trade and B2C trade, with retail acceptance, where the consumer is able to make payments to the retailer using electronic and mobile, then, you know, starts to oil this acceptance within the SME sector. So information can flow. Information can flow in terms of goods and services to the consumer, and then transaction flow back to the owner of the business, or in this case, his own supplier. And this then continues to fuel the use of electronic payments. Now, although this will bring a lot of benefits to SMEs, today what we have largely is that the multinationals and big corporations are the ones enjoying these benefits. Benefits of cost reduction and enjoying economies of scale along that line, streamlining the intermediaries and distributors, and price transparency as well. These are benefits that are being enjoyed along this sector from business to business. For business to consumer, of course, market awareness are benefits that the SME can easily enjoy without spending too much money. So just with adverts or things that they can put on the phone, they can easily get information across to their consumers, and they can then make purchases. I'll do a quick one here, because basically what I'm saying is that the perception to the SME is that this is out of his reach. This is something that he does not need, and so they find themselves exiting. They find themselves not being able to enjoy the value proposition that is brought to the table. There are about 3 categories of, I say, context that the SME would look at it. One is from a technological context in terms of the relative advantage and the startup cost. Here, m-commerce basically has better advantage when compared to e-commerce. And because it's really skewed at this point in time, the SME is not able to tell m-commerce and electronic commerce. So at the end of the day, he pushes both out. Triability is also a high degree in terms of m-commerce, because they already have the phones, so they can try the products. The size, because of the size of their business, it's suitable for them to use. The financial commitment is low, and from an environmental point of view, if they can take use of it, then their next trader can take use of it as well. So at the end of, in going into this market, the cost reduction that it offers and the competitiveness are the strong engagement factors that we are going to be leveraging on to help them to adopt the simple voice and SMS, and also let them move into the more complex solutions like the ones that were described by the Enfino speaker. So adaptation are part of the engagement drivers. As the world keeps moving, as new technologies keep coming, they adapt to it, basically to reduce cost and improve competition amongst them. Globalization is also one, because these clusters also need to connect to international chains that supply them as well. Customer expectation. Here I have a small story where I typically went to one of these clusters to buy clothes, and I saw somebody there that came to buy a piece of article. I don't know if some of us will know it is local fabric. And the person came and said he's going to pay with an instrument, basically a card. And the person that was selling did not have the ability to collect from the card. So this is a problem that they have. That was a lost sale. Why doesn't that person have the, the acceptance tool to be able to collect that instrument from the customer? So at the end of the day, we also look at information flow across this business. Information flow, cost reduction, and competitiveness are high indices that will drive engagement. Opportunities are there across the entire value chain for the mobile operator, the bank, the consumers as well, and for the retailers, it's enhanced cash management for them. It reduces fraud. And for those who are even able to proceed beyond just the voice SMS and start using more complicated or higher grade m-commerce solutions, you see things like inventory management and so on. So for us in the entire sector, there's an opportunity to leverage on this. And finally, we are saying that it's not a silver bullet that's going to shoot at this, and it's not a situation where one size fits all. There is a need for us to access this market that we want to address because they're in sectoral basis and find out what is the size, what are their needs in this target market, and what is the state of the payment systems within those markets so that we know what we are going to give. Then on our side, internally, we need to know what are the assets that we're going to leverage on, then the appropriate business model. Because here, it's not just to look at it from a technical point of view of what are the solutions that we threw at them, but what business model do we use to engage in terms of are we insourcing, outsourcing to provide solutions to these markets, and what value chain players do we engage to collaborate to serve these markets? These are the thoughts that basically I wanted to bring to the table for us to engage in terms of what we need to do to act now to serve this portion of the market that basically serves everybody in the nation. In serving them, we are then promoting more financial inclusion. Thank you.